Hello guys, this what oil is from a member of mine who asked me to analyze this it. He said, could you please help me to identify what waves? What's wave? So first of all, the crude oil make a movement, an impulsive movement to this very level, which is believed to be a five-wave structure. So after this movement, he decided to correct this movement, and according to Elliott wave, the correction are normally in three-folded. That is A, B, and C. According to Elliott wave, any movement that happens in Elliott wave, any impulsive movement like this, let me teach you some impulsive movement. There must be a correction. 3 to 50% of that impulsive for another movement, and that is how market moves. It moves impulse, correction, impulse. That is how market move. Impulse, correction, impulse, correction, impulse. That's how markets move. And in Elliott wave, there is a five-wave impulsive movement before a bigger correction. Market move first one, do an correction, one, A, B, C. Another impulsive movement, two, another correction, another impulsive movement, and then finally come down to do the 50% of that big five. So when you look at this place, you will see wave one, wave two, wave three, wave four, and wave five. Once you find this, then rest assured that we're going to see an corrective movement of A, B, C, A, B, C. This is elementary of Elliott wave because there's many type of correction like triangle correction, expanded flat and rest of them. So this is just a zigzag, the elementary one. So with this now, let's go to this crude oil and see whether it happens really, is really true. So looking at the crude oil, you discover that there's an five-wave structure here. This is one, this is two, this is three, this is four, and this is five. So crude oil move that five wave. So as these people have come to movement, they expected a correction at least 50%. This is the 50%. Let me delete this one. Let me just make it not to come on daily time frame so that I can see what I want to see. This one also. Let me reduce it daily time frame so that it won't disturb me. Okay, so now when you look at this what oil, you discover that you've already done an A. See the A here. A, B, five wave than A. And looking at this place, you see that it's B is coming in form of triangle. This is A, B, C, D, and E. So A, B, C, D is coming in form of triangle. Let me expand it a little bit so that you can see what I'm saying. This is A ended here. Let me get more boldly. More boldly. A ended here and B started here. Started with this one A, B, C, D, and E. So that is the end of the triangle. You see that this one break the triangle and come back and break it. But they are coming. So this ABCD now is that shows a sign. Let's check this trending line and see what is happening, whether you break it on the top side. Okay, okay. This is the A, this is the B. And what we are expecting now with the C. So according to little wave, C is normally, since this A has been the 50 already, I expected the C to be in one this very place or even below. In some cases, it may come down to this very place, this side, this 78.6, but not all the time. So in some times, in some cases, not all the cases, not all the time. Doesn't come all the time. Doesn't come all the time. So in some cases, it can come to this very level. Can come to this very level. But I expect it to end this place because the wave A have approached 50%. So this wave B is here, triangle. After wave C to drop here, and then buying will continue from this side up again. So that's how Elliott will move. So that is what is happening in what oil. So as I have known this now, what can we do to get to benefit from this movement now? How can we benefit? Let's go down to 4 hours time and see how we can benefit. In 4 hours time, when you look at this place, you discover that the 5 waves of the wave one of that C has completed. Look at it. Wave one, wave two, wave three, wave four, and wave five. This is wave one on that 5 wave is complete. So the correction come also. See the correction come to almost 78. See that I'll tell you about 78. Come to 78.5. So I would have said from there, I saw it when it was coming. But the reason why I did not said it, I did not said it, or said it from here is that the movement of this correction didn't move me. You know, the movement of the correction is somehow is not moved the way I expected. I expected a movement something like this. The correction comes here, and it is going to do. Let me show you something. The correction comes here from 5 to here. Then you do some little corrections before it moves up to here. Then I can sell. But the correction uh is too impulsive. It's too impulsive. It moves so fast and then come up here. So I didn't when I saw it I didn't sell. So I was looking for an opportunity to sell, but I didn't sell. So between thing dropped to this very place. So what do I do now? Since the correction has completed to this wave two, so what will I do? I say wave trader. I'll wait. I'll wait for this guy to correct this wave. He will correct this wave. Then I'll enter and sell. He will correct this wave, this 5 wave that is doing now. 1, 2, 3, 84. Going to come down a little bit. Look at it now. This is 1, 2, this is 3. It's going to do 4. Going to do 5. And when that is done, I'll wait for correction. Then I can enter. Then here will be my stop loss. Here will be my stop loss. It will be here. But originally, if I have entered here, I would have used here as my stop loss. This very place as my stop loss. And this is a stand. This can be my stop loss if I want to enter even from here, because looking at what happened here, this very place, you see that it's an expanded flat. The same thing might happen because of this way this guy move. It might come the way he move like so straight. As this one moves so straight, we might see coming here and then this one come here again. Then that's become an expanding flat. It's become an expanding flat. So that is why when I look at it, I didn't see a confident to sell from here because of the way this this correction move. Look like just a wave A of the correction. That is, it didn't do me ABC. So I see it as a wave A of the correction. This is wave B of the correction, and wave C is going to come and did an expanding flat. So this very trade, I'm expecting an expanding flat, but it doesn't mean that it must come. So I'm expecting an expanding flat like this. What I'm expecting is an expanding flat. I'm expecting an expanding flat. So once that is done, then I can enter. And if you're not going to be an expanding flat, I'll leave it. So I'm expecting an expanding flat from here because of this way this one move. But it might not be expanded flat. It may decided to go his way without doing expanding. It may decided that this is the correction they wanted to do, that they have done it. So it will start going down, and I will look for a buy and buy. I look for a sell, sorry, and sell from there. So I hope you understand the movement of this watt. The movement is downward, and it will continue to go downward until it gets to here. It gets to this very point. This is the point I wanted to mark. Once it gets to the price of $51.500, then you might think of buying. You understand, guys? So that is the place it's going to. You understand? You can see where I forecasted it before. E and then here. And that is exactly what it's doing. This place will be a wave 3. This will be a wave 4. And this place will be wave 5, which is this main C. Yeah, from there I think of buying it up, or you will start going up again. You understand? Okay, I think that is all for what oil. I hope you understand. If you don't understand, you can still ask, and then I can light it out for you and show you what is happening exactly. Okay. Thank you guys for watching. Thank you for your question. Yeah. See you some other time.